Chakri Lokapriya, good morning. Chakri, good morning. Can you hear me?
Yeah, good morning. Thank you so much.
How markets looking?
I think, right now the markets have recovered clearly in the last week or so. And with again, the latest round of tariff noise, there is some amount of profit booking. Fortunately, as far as the tariffs are concerned, maybe some of the auto ancillary companies in India will get impacted, Tata Motors to an extent for its JLR bit. But outside of that, given that India is not such a large exporter of automobiles into the US, it's unlikely to have any significant impact on the overall sector or on the market.
Okay. What's been your strategy, Chakri, of late? I mean, where have you picked your spots? What are you shopping? What are you buying?
Because the market had corrected, financials had corrected along with that, and a lot of with the interest rates cuts cycle beginning in India. So and therefore, while net interest margins might come down a little bit for banks, but the volumes that will pick up because of lower interest rates as the overall environment revives. So we've been buying both PSU banks and NBFCs, and also Axis and ICICI.
Right. Very good morning to you, Chakri. Shail also joining in the conversation. And one of these smooth movers, we could put it, in this sort of a market upcycle, or rather a sort of a recovery cycle over the last few trading sessions, has also been power, not just banks. Are you looking at that space at this point in time, and how would you play the power theme if you want to play it?
No, indeed, clearly with the economy reviving, so which means manufacturing revives, and as manufacturing and economic activity revives, there is more need for more power demand, and therefore all the power companies need to produce more power. That is, of course, the very short term. And the secular story is, of course, intact in terms of, India is a power shortage country, therefore we need lots of power. So we've been buying the power financiers, the REC Power Finance, extremely healthy companies, valuations corrected a lot, trading under one-time book value. And they lend today not only to thermal, renewable, but also into infrastructure. So that's the space, PFC and REC.
One of the interesting moves has been Reliance Industries. You have an MK's note that has come on Reliance Industries, where they're saying that Reliance Industries is under-owned after FI and MF outflows. They're saying that RIL will outperform if there's any positive momentum in the fundamentals after the stock has seen such sharp correction already, especially since July. The stock has seen about a 37% correction is what actually MK's note is referring to. But Chakri, what is that positive fundamental momentum that we should watch out for Reliance Industries for it to actually go ahead and gallop going ahead? Because this one is a crucial one, a heavyweight when it comes to the Nifty index, and also a sentiment booster as well.
When we talk to our FII investors, clearly one big fear has been about the rupee fall. Not fear, but it's been a real thing. So they've been hurt by the rupee fall. And so Reliance being, the largest, one of the largest weights in the MSCI India index, it's been a prime selling candidate. Second, talking about the fundamentals, oil and gas has been on a very volatile move over the last several months due to various global uncertainties, as well as where will OPEC end up having its own level. So with the rupee falling, which will impact Reliance Industries and other oil companies, import hedging. And so given that the sum of stories is intact, it's just there's lots of near-term noise has impacted Reliance as a stock, but clearly fundamentally, all its four businesses are very strong.
We know that small cap indices have had a great run, and I'm talking about last 12 months. What is the small cap return in last 1 year? 10%? 5%, 10%, 15%?
I think 5%.
I'm not participating in this quiz game at all.
Chakri?
I would say roughly 10%.
Okay.
Guessing, please.
Okay, the Nifty and the small cap have given equal returns in last 1 year. Hello.
Wow.
Let's look at it. कल मैं डेटा देख रहा था रात को. Small cap index is up 4% and Nifty is up about 5. Let's look at it, please. So in last 1 year, with all the hullabaloo in small cap stocks, ऊपर चले गए, ये हो गया, वो हो गया, small cap has given returns which are lower than Nifty. तो काहे का बबल भैया? काहे का बबल भैया? Chakri, it's a fair point, right? I mean, the whole excitement in small, mid-cap stocks, that's got completely evaporated.
You're absolutely right, but individual stocks have corrected clearly far more, and I guess and those stocks had actually risen a lot prior to the fall. So I guess that's where the most of the noise has been, saying that small cap, mid cap has done well, and mid cap probably has done better than the small cap. Is my guess again.
Chakri, where are you hunting in the Nifty? I mean, which spots are you picking up?
It's clearly within the banking financial services of the Nifty. So the ICICI, Axis, incrementally maybe a little bit of HDFC. That's the space that will, State Bank of India, all the financials basically within the Nifty. And the auto stocks, M&M, Bajaj Auto, Hero Motor, all these stocks have corrected. M&M has not corrected, but Hero Motor and Bajaj have corrected fairly significantly, and their valuations are beginning to look far more palatable today.
All right, there's an interesting note that's coming from Citi on Prestige Estates, where they had actually met with the management and where they're saying that the management has indicated that there's no slowdown in demand. However, the company will likely miss the FY25 pre-sales guidance of about 24,000 crore rupees given the delay in their Indirapuram launch is what they're saying. However, you have Citi that is maintained or has a buy rating on the counter. But what's your take, Chakri, when you talk about the real estate pack and especially the fact that you have Prestige Estates and management coming and saying there's no slowdown in demand. But when you talk about demand, also you've seen a lot of rise in the luxury side of residential properties.
Yeah, two things. One is the inventory levels in all the real estate companies are today more manageable than they were, let's say, about 2 years ago. Second is clearly, post in the last couple of years, the luxury segment has continued to do well, has been the strongest pocket where the consumption in various areas. The luxury has held up. That's a segment of the population, the income has not been hurt. And as far as Prestige is concerned, they have this nice mix of both commercial as well as residential, and commercial is also picking up. So I think, from that perspective, I think Prestige looks okay. But all these companies are trading well above book value now.
Chakri, give us your top ideas for FY26. 1, 2, 3. Large cap, mid cap. I'll let you choose.
The Power Finance and REC are clearly, the top ideas if it's within financials. Actually, across board also. Simply because, as we've discussed, the stocks have corrected a lot. Power is a very important segment of growth. Infrastructure is. The books are very clean. The balance sheets are strong. Both are Navratna companies, well-run companies. And I think, therefore, if they go back to their historical multiples, 2 years ago multiples, the stocks have very significant upside of more than 30% each.
Right. Chakri, I wanted to get your view, especially on the cement pack. We did speak about real estate. This one also is like a realty ancillary play also, if you could put it so. You have some comments coming in from JK Cement where they've highlighted improving outlook demand. They're also saying supporting prices, which will actually go ahead and drive a healthy FY25 exit profitability for the company in particular. But how are you gauging this entire cement space? Because there's this entire year has been a year of consolidation as well.
As interest rates come down and the activity picks up, cement volumes will further move up, and the pricing has not actually moved up higher than inflation. Inflation adjusted price increases for the cement industry has not happened. So the price increases have been 2, 3, 4%, which is lesser than inflation rate. Second is Ultratech on one hand and Ambuja on the other hand are the market leaders, because they consolidated the whole industry. And so they are the primary beneficiaries of this entire move. And of course, the other cement companies will also move up, but I would focus on these two.
Chakri, could value retail be the story of the year?
Retail will clearly pick up simply because, starting April 1st, there'll be more income in the hands of people who, they can, of course, spend that online or walk into a real shop. But, footfalls always increase. People like to go out. And second is, given now this focus on pricing and it's becoming a regulatory issue, they're investigating the Zomato and Swiggy. And all that noise will make Zomato and Swiggy step back a little bit on the discounting that they give to products. And that is an incentive, therefore, for the consumer to also go back to the retail chains. So, and the retail chains, again, have corrected and they've not done really that well. So I think the valuation-wise are looking better. So answer is absolutely, I agree with you.
Right. On that note, thank you so much, Chakri, for being part of the show, talking about various sectors as well as participating in ET Now's edition of the quiz game with Nikunj this morning.
If you like this video, then like, share and subscribe to ET Now.